Thank you. Good morning. So I think in the introduction, Kaustubh mentioned that I'm an investor based out of Pune. The reason I stress this is I consider myself a Mumbaikar. Most of my life I have spent in Mumbai. That's why in any introduction I kind of stress that I'm now based in Pune. So thank you. I'll quickly start. The reason for coming and presenting in such kind of a forum is not to my knowledge or what stock I am investing in or anything of that sort. It is basically to also figure out what am I missing and what have I not paid enough attention to and what is the antithesis to my investment. Right? So I am happy for the audience to please point out mistakes or blind spots that I have in this presentation. I'll quickly go through this. Yeah, so I'll be presenting on International Gemological Institute. It is basically a certifying agency for natural diamonds and lab grown diamonds. Okay, so think of it as a rating agency kind of a business, not rating debt, but basically rating diamonds and jewelry. Right. So a quick disclaimer. The entire presentation is for educational purposes. This is not investment advice. I operate a firm called Candor Asset Management LLP. We are registered with SEBI as investment advisors and both research analysts. I'll let you quickly go through this disclaimer in 20 seconds. I own this stock and I have also advised this in our advisory. So our clients and investors also own this stock in their portfolios. As a quick overview of this company. So this company was basically founded in Belgium and the Indian subsidiary was founded in 1999. Blackstone acquired IGI in 2023 and consolidated the global operation for this business. Right, so the entire European subsidiary, US subsidiaries, even China business is actually a subsidiary of the Indian listed entity. Right, so when you buy into this business, you get the entire global business. You don't get a part of the business; you get the entire global business. Now, what does this company do? Basically, this is into certification of diamonds, both natural and lab-grown diamonds. So I'll also briefly tell you the most reputed agency for certifying natural diamonds is GIA, which has the highest market share in natural diamonds. But IGIL has the highest market share for lab-grown diamonds. Right? So if you think of the business, right? What is the industry structure? Industry structure is simple. It's an oligopolistic, low capex business with high operating costs, right? So the major cost is into marketing and basically the certifying process and the employees and the qualified employees. Right? So once enough volume is achieved, it's an extremely high profitable business which does not require too much new capex. Now, what are the success factors in this industry? Trust, scale, standardized processes, and affordability of the certificate, right? And more or less, if you see the 3-4 players that are there in this industry and the several smaller other players, most of them are operating for decades. So GIA, I think, has its origin in 30s and 40s. So GIA, the Gemological Institute of India, is actually a non-for-profit organization, right? So this industry is reasonably stable and it has about 3-4 players. Right? Now let me briefly tell you what is the difference between a natural diamond and a lab-grown diamond. Right? Basically, there is no difference. Absolutely no difference. Right? The only difference is the origin. So one is natural diamonds are mined from the earth, and lab-grown diamonds are basically manufactured in a lab. Right? There is almost no other difference. If we see the retail price of lab-grown diamonds is almost 60 to 80% cheaper than a natural diamond. Now, what is the process of converting a diamond to jewelry and selling it at the retail, right? So if you see, except the origin of the diamond, mined versus produced in the lab, everything else is exactly the same. There is no difference. There is absolutely no difference, right? And what happens is, the certification happens at the cutting, after cutting and polishing. So the characteristics of the diamond change after cutting and polishing, and you want to certify the quality of the diamond after cutting and polishing. And what we have to also emphasize is that 95% of the market for diamonds, both LGDs and natural diamonds, for cutting and polishing is in India. So 65% of the manufacturing capacity for lab grown diamonds is in China, approximately 35% is in India, 5% will be probably somewhere else. So even the lab grown diamonds in China have, which go into the jewelry market, have to be brought to Surat in India, and cutting polishing happens at that stage, right? So these 2 points are very important to understand the entire industry structure. 95% of the cutting and polishing market is in India, and certification can only happen after cutting and polishing, right? So why do we need certification, right? How do you know whether the diamond you are buying is natural or lab grown? How do you know what the quality is? Is it a glass crystal or is it actually a diamond, right? So we don't. So the customer definitely needs trust either from the manufacturer, from the retailer, or a third party independent certifier that the what he is paying for as the diamond is actually a good quality diamond. Whatever he is buying, he is getting that, right? So again, I am emphasizing here that the timing of the certification happens only after cutting and polishing, right? Now, what also happens is that the certification cost is a small cost, relatively small cost compared to the entire diamond industry profit pool, right? But it's a very lucrative business with very high margins, 50 plus PAT margins, right? 50% plus PAT margins, very high ROEs. This is typically, I mean, this is a very approximate assumption. The cost of certifying a 1 carat diamond is approximately $65, right? Which is about 6,500 rupees. And frankly, for discounts, these companies give about 75-80% discount, right? If you go back here to this slide, a 1 carat US retail, 1 carat diamond, natural diamond costs $4,000, right? Certification cost is probably $8, $9, $10, less than 1,000 rupees. So $4,000 is almost 4 lakh rupees, right? So certification is just 1,000 rupees. So for even for lab grown diamonds, the cost of a lab grown diamond is about say 1,000, or it could fall more, right? So, but the certification cost is still minuscule compared to the retailing price. Now, this is again an approximation of the growth rates of natural diamond and lab grown diamonds. Natural diamonds are more or less stagnant, right? Lab grown diamonds are catching up very fast, and they're catching up very fast, right? So, growth rates in lab grown diamonds are 20 to 30% or even higher, right? Now, this is the kind of difference between the price, right? Now, everybody debates that natural diamond is a natural diamond, lab grown diamond is a lab grown diamond. You know, you go for the original, you go for the correct thing, and you know, the pure thing and all that, right? But imagine it this way: naked eye cannot distinguish the difference between a lab grown diamond and a natural diamond. So what is going to happen? People buy diamonds to brag, right? To show that I am rich, I can afford diamond, or I you know, I have good jewelry. And when you go to a party and somebody has bought 5 lakh rupees worth of diamond, right? And somebody else has the exact same quality or even better quality and has paid only 1.5 lakh. Nobody is going to tell that I bought this or bought that, right? They are going to just see what is the quality of the diamond, right? I mean, how the jewelry looks, right? So what is happening, and whatever I see around myself with my friends or their wives or their the ladies in the family, is that what is also started happening is people who are buying natural diamonds are also open to buying lab grown diamonds with the full knowledge that they are lab grown diamonds, right? So somebody who was buying say 3 diamonds over a 10-year period, right? That person will probably buy another 3 diamonds in 3 years, which could be lab grown diamonds. Now that say she's 40 and she wants another jewelry set, this time she doesn't mind, you know, investing 1/3 the money, because she already has some so-called family jewel, right? Already, so they are open to buying. So, second, the market is substantially expanding because suddenly the affordability of the diamond is there with a much larger audience, right? So what has actually happened is that 50% of the bridal diamond rings sold in the US now contain a lab grown diamond. So this clearly shows market acceptance of lab grown. So essentially, the affordability of the lab grown diamond is 3 to 4 times, I mean, 75% at a discount, right? And as I said, lab grown diamonds, in my opinion, have expanded the overall diamond jewelry market. They may or may not cannibalize the natural diamond market, but definitely they will end up, they will have their own set of buyers, right? So this is again approximate market trends in the multiple geographies. If you see, US is 75% of today's lab grown diamond market, right? But the trend is, I think, catching up quite fast in many other geographies as well, right? Almost all large jewelry brands in US have launched their LGD collections. In fact, in India, I believe Titan has also launched their separate LGD stores or brand. And if you analyze most of the jewelers, I think they are right now in the position that they don't want to open up a lab grown diamond brand. But I think a lot of startups are there which are into lab grown diamond. Right? Now, this is an approximation of where the profit pool lies uh, between natural diamond and lab grown diamond. So if you actually see midstream is basically cutting and polishing. Okay, upstream is manufacture. Right. So in natural diamond, the profit pool substantially lies with the upstream, which is the manufacturer, like De Beers or Alrosa. In lab grown diamonds, the manufacturers don't make too much. Right. And cutting polishing again is almost similar. The margins are similar, and they are thin. Margins are thin. Right. What happens is the retail makes much higher margins in lab grown diamond. Now, this is where the adoption will be pushed, right? The marketing budgets are there with the retailer, and they can afford to spend more because of higher volumes, higher margins, right? So the adoption will be pushed by retailer expansion, right? So what has also happened is, if you can see, a lot of retail chains have actually come up. I think Jiva, I can't even pronounce some of the names. There is also a listed company called Goldiam International, which was into manufacturing of jewelry. They have raised a QIP about a year back, and they have also started, they have plans to open 150 plus stores in the next 1 year, 1.5 year, whatever that timeline is, right? So from a manufacturer of, outsourced manufacturer of jewelry, they are now wanting to become retail. Again, certification is the small size of the entire industry profit, right? So it is, what I also say is, it's a low risk way to participate in the entire value chain, because almost everybody will need certification. Now, IGIL is the pioneer of LGD certification and commands about a 65% market share in certification of both LGD and LGD jewelry. So I'll just explain what is the difference between certifying the diamonds and certifying the jewelry. So sometimes the size of the diamonds is very small in the jewelry. So what ends up happening is, instead of certifying each diamond, a lot of times the jewelry is certified, but the diamonds are individual diamonds inside the jewelry, which are very small, are not certified. Right? Now, this is basically a preferred agency for most retailers, right? If you see by market share. So what has also happened is, IGIL has also brokered tie-ups with some of the LGD manufacturers, where the certification lab is actually located inside the factory of the manufacturer. So the process was, you make the diamond, you send it to the lab, then the lab will certify, then after a few days the physical diamond will come back, and then you process it and send it to the jewelry maker, right? Now what IGIL is also pioneering is that my lab will be inside your factory. So you don't even waste that amount of time. And of course, I think this is a very important part, because there is a global consolidation under one entity. So you basically it's like, buying a Meta or a Google or Amazon. Why it also works is that the entire global business is listed in the US. Right? So that is why if the industry or the company does well, you are basically also basically you are not having a problem in India where the MNCs are listed and they have a global arm, and there is a royalty being paid, and some businesses in the private entity outside the listed entity and all. Compared to GIA, of course, GIA is the largest and the most respected certifier for large natural diamonds, right? But what has also happened, I think we have to spend 1 minute on this, is that GIA has lost market share in the uh, certification of lab grown diamond. So GIA is basically an industry body, non-for-profit industry body made by the traditional natural diamond manufacturers and sellers and that industry, right? So they have a inbuilt incentive to not let lab grown diamonds grow. So their positioning is natural. It's not comparable to lab grown diamond, right? That's the perception that they want to create. What has also happened, what GIA has also come out with is uh, what it has said is that all lab grown diamonds are good in quality. So what they are specifying is you cannot make a bad diamond in a laboratory, right? What they are saying is the minimum. So when natural diamond is natural diamond, some of the diamonds are good, some of the diamonds are not so good. So certification plays a part in deciding, in establishing the quality. What they are saying is in a lab grown diamond, why will you make an inferior diamond? You will, if you have to go through the entire process, you will try to make the as best the diamond as possible. So in labs, bad diamonds are not made at all. So you don't need such an elaborate process to certify the diamond, right? So they have come out with a much more simplified methodology. Now there are two opposing views to this. So some say that the cost of lab grown diamonds will go so low that certification will no longer be needed, right? Or certification cost will not be justified, or the certification cost will have a downward pressure. So if you are realizing 900 rupees for a lab report today, maybe 2 years later you will have to only charge say 400 rupees for the report, right? That is one. That is one thought process. The other thought process is that GIA has lost the game in LGD. They don't have any market share. In either case, their backers or it's a non-profit of collection of people who don't have any stake in LGD, or rather have a stake where they want LGD to fail. Right? So I don't know which is true. Time will only tell. And of course, the entire industry structure is such that just like India has, I think, 3 major rating agencies or 4 major rating agencies, and for a long time, the next rating agency just doesn't come. Especially if you remember ILFS crisis, where except CRISIL, ICRA, all the other three, India ratings, ICRA, and CARE ratings were basically uh, fought hand in glove with the ILFS management and heavily, taken to task, but their license was not rusticated, and I don't think there is a fifth or a fourth rating agency which has come up. Okay? So the incumbents benefit from the growth of the industry. Now this is a brief trend in revenue and PAT. This is not very indicative of the actual growth, because I think around 2023 is what Blackstone also consolidated the global businesses in the India entity, right? But that's not a very large part. So I think that's around 20% global revenue. Non-India revenue is about 20% of the entire business. So this is 1 month back, 29th May 2026, because we have to use old price data according to SEBI regulations. Market cap was about 16,000 crores. Price was around 372. P ratio is 28. Right? Return on equity is high. It's a good business. So this is how it looks like, the valuation. So for a highly profitable oligopolistic business with strong financials and good profitability with a possibility of high growth, I think PE of 30 is not very demanding. The bull case rests on LGDs meaningfully expanding the overall jewelry market given their affordable price points and also US has caught up, but I think India and China have to catch up to the entire. This is the brief stock price chart. What I want to highlight here is basically that it came out with an IPO in December 24. Stock went up to more than 600 and has fallen after that. So I want to buy into businesses where there is no euphoria. Right? This stock price, I think, demonstrates that there is no euphoria around the business. So people are not running hands and heels to buy it. I want to buy a business when maybe it's not the most popular stock in town. So quickly, I think I'll summarize the investment thesis. Low capex, high profitability, oligopolistic business, structural tailwinds from lab-grown diamond adoption, right? Market leadership already with 65% share in LGD certification. This is basically a pick and shovel exposure, right? IGI will participate in the lab-grown. So what is the risk to the investment thesis? One is India and other geographies do not adopt lab-grown diamonds, right? Which seems to be unlikely to me for now. Then lower realization risk, because I think the price of lab-grown diamonds have fallen by 60-80% in the last 5 years, right? So they are more or less nearly at production cost. So if it falls further, then maybe even the certification is not required, right? This is one risk for sure, right? Cost of LGD keeps falling further, but I think we are already at production cost, so I don't think it will fall further. But we have to be cognizant of to check quarter on quarter whether this is actually happening, right? And certification pricing pressure is not offset by volume, right? So even if certification costs today, which are around 900 per report, fall, if the volumes become 4x and the cost becomes half, you still have revenue growth and profit growth for the. What will make me sell? Basically, whatever risks I have enumerated here will start reflecting in numbers, right? Revenues will stagnate, or the realization per certification report will reduce, right? These are the two factors I will keep monitoring, and if this breaks, right, if the company is not able to grow by at least 10% CAGR over the next 3 years, then I think my thesis is wrong and I need to sell, even if we don't mind selling if our investment thesis is 80% of my presentation is based on this investor letter by a PMS called Exponent Tribe, run by Akshay Jogani and Sagar. They are based out of Mumbai. Basically, this report I gave to Claude, and the entire presentation is made by Claude. Of course, I edited a little later. They have done a much better job of explaining the entire thesis than me. So please go and read this investor. They have done a much better job than me. Thank you.